Good evening, everybody, and welcome to Metropole TV. This is The Smart Investor. I'm your host for the next hour. My name is Ali Khan Sachu. It's a pleasure to be with you this evening, whether you're following us on GoTV, Star Times, or on our YouTube live feed channel. So good evening, everybody. Let me start with a big announcement that we received. The NSC launched the next derivatives market. That was launched today. It's been in a period of gestation, went live. I'm speaking to George later in the second half. We'll have a talk about what he thinks it's all about in the second half. But congratulations to the Nairobi Securities Exchange and their CEO. This has been some time coming, and it's only the second derivatives market in Sub-Saharan Africa after South Africa. So it is a big deal, and commendations to the Securities Exchange for that announcement. I came across this report from Real Forge. The rise of betting ads is what it says. In 2014, betting expenditure constituted just 0.3% of all ad spending. There it is, minuscule. It's what you call so small it's practically not on. It's barely seen there. But then, 2018, it's 22%. 22% is nearly 20 billion shillings. That's $200 million that the betting companies spent last year. They're the single biggest spender. Second were the banks at 14%. Third, foods at 9%. And we've seen a lot of news flow recently. Safaricom has been instructed to cut a lot of them off. So let's keep an eye on that. But, that's a big spend, and that's a phenomenal increase, isn't it? 0.3% 2014 to 22%, single biggest advertiser in Kenya today. So really remarkable development. Turning to the shilling, people always talk about the shilling and get worried about the shilling, but look, it's barely moved in 5 years. If you look at the range from 4.5 years, from 2015, we've basically been in a very tight 8 to 10% range, and we remain within that range. I think the key things to keep an eye on, if you are worried about the shilling, is the price of oil, and I will come to that towards the end of this first half, and inward remittances, because inward remittances is now the biggest source of dollars in Kenya, and the price of oil, every month we got to write a check to import our petroleum products, and that's the biggest single expense item that Kenya Inc. spends money on. Now turning to the hunt for yields, they call them African junk bond markets. That's actually sovereign Eurobonds. Our Eurobonds fall into that categorization. And they are the latest trophy in the global hunt for yield. Investors less wary about the quality of debt they're buying. African Eurobonds, mostly rated junk, have rallied to year or record highs this month. So you can see a record high in price equals a lower yield. So this is a composite of African sovereign bond yields. The time to buy them was last year in December, and you see that enormous rally from above close to 9%. And we're now close to about 7.25%. And the interesting points to make, these notes are an attractive alternative amid the growing cohort of negative yielding debt. We've been speaking about that. It's been an extraordinary outcome where European countries, including some of these Eastern European countries, including Italy, are able to sell bonds at negative rates. It's a unique phenomena that we haven't seen and it's spread and infected, and it started off in Japan in the 1990s, and now we're seeing it in Europe and in other places. One must appreciate that African Eurobonds are not divorced completely from global financial market developments. When it is risk off globally, they sell off. When it is risk on, they typically rally as well. And this is the point. There are two impulses for African Eurobonds. One is a credit consideration, a calculation as to whether these governments will pay us back our money at the maturity of the Eurobond. And the other is a foreign impulse. And what I'm saying is this rally that we've seen is entirely to do with a foreign impulse, entirely to do with this new Wizard of Oz world of negative interest rates. And you know what? Guess what is one of the best performing Eurobonds this year is, of course, the Kenya Eurobond market. Kenya has delivered a 20% return. If you held the long-dated Eurobonds, Kenyan Eurobonds, you've earned 20% in dollar terms, versus, had you had your money in the stock market, 6.5, 6.6%. So, as investors in Kenya, if you're purely looking at Kenyan assets, the Kenyan Eurobond was actually the trade of the first half of this year, globally. And that's an incredible outcome, is it not? African issuance accounts for about $15.2 billion worth out of $152 billion market that we do have. So very interesting development there, and particularly about Kenya. President Magufuli has urged Tanzania's women to have more babies to boost the economy. He's telling them to set your ovaries free. Tanzania, of course, is one of the world's highest birth rates, around 5 children per woman. Population of 55 million people. He told the women of Tanzania, set your ovaries free, have more babies to boost the economy. When you have a big population, you build the economy. That's why China's economy is so huge, he said. I know that those who like to block ovaries will complain about my remarks. Set your ovaries free, let them block theirs. Today was the World Population Day, and what's interesting, I just want to show you this, that by the year 2100, Tanzania is expected to have 286 million people. It's 55 million now. So it's expected to grow by 378% from now till 2100, one of the fastest growing populations. The fastest is going to be Niger, which is where they, of course, held the African Free Trade Agreement signing ceremony just a few days ago. So President Magufuli telling Tanzanian ladies to have more kids. He wants to boost the population because he says the population is correlated to economic growth. Let's turn to South Africa, where this is the central bank governor. He was reconfirmed in his position, and it is likely that South Africa will cut interest rates next week by a quarter point. You know, South Africa has been in the slow GDP lane. It has been growing at around between 0 and 1%. He'll be looking to give that economy a little bit of a boost. President Buhari, who's well known, and this is a super photograph. Do you know where this photograph is from? This is his wife voting, and he's checking who she's voting for. I think that's just such a great photograph. She's quite feisty, is Aisha Buhari, and has a lot to say for herself, but I love that photograph. But the point is, President Buhari, who won re-election several weeks ago, otherwise known as Baba Go-Slow, that's his nickname, has yet to name his cabinet nominees, but is expected to name them this week. Buhari was re-elected 4 months ago. Nigeria has been without a cabinet since the ministers serving during his first term stepped down in May. The gap has led to a slowdown in investment, a near halt in decision making, according to investors, contractors, and diplomats. So let's hope that he does appoint his cabinet, because he's taken an inordinately long time to do it so far. Nigeria also said, the central bank said they're going to stop paying interest on bank deposits over $5.5 million. And I would have thought that will be a red flag to some people who might try and move their money outside the Nigerian banking system in order to get a better yield on their deposits if they're, of course, holding deposits of that size. Turning to emerging markets, this is the best performing currency in emerging markets. It's actually the Thai baht, and it's been strengthening versus the dollar, now at the strongest level to the dollar since 2013. That's quite something in the current environment. And this is a league table of Asian currencies, so up 6.49 Thai baht, second Duterte's Philippine peso, 2.67%, India rupee, very marginal, 1.75%, and the South Korean won, worst performing, minus 4.68%. That's all about a slowdown in electronic goods demand, I think, that has led that sell-off over there. Turning now to gold, of course, we've spoken about that before. Bernanke said people hold gold because when they're worried about very, very bad outcomes. You know, I've been telling you, we were below 1,300 right until close to the end of June. Then we rocketed up. We got as high as 1,440, 1,424 this month, and just now we're at 1,411. But gold, you know, store of value, had a good year this year so far, and that is in part because you don't get any interest on gold. But if every other country is paying you negative interest, you're better off getting zero interest. That's why people are all buying those 1,000 Swiss franc, why they're storing those 1,000 Swiss franc notes I spoke to you about yesterday. And really, it's been the financial repression of interest rates which has made holding gold more attractive, and that's why you got that massive surge in the price. I still think it's going to be tough for us to get through 1,440, but we need to keep an eye on that. Let me now turn to a story coming out of Colombia. Listen to this. Coffee prices, we talked about that in May, hit a 12-year low in May, which obviously is not helpful. And Eugenio Velez, a director at Colombia's Coffee Federation, we need action because the problem is clear. There are 25 million coffee producers that can barely cover their production costs. So they're trying now to do what Ghana and Ivory Coast have tried to do with cocoa, which is to try and club together and extract a better price for the producers. Coffee is clearly a very profitable business for roasters, but it is not working to produce sustainable development. So there is a puzzle, that's Professor Sachs, and then looking at what types of solutions that they can come around in order to get prices higher. So keep an eye on that if you're in the coffee business. But essentially it looks like we hit a low in May and that the prices are beginning to improve. And today, actually, there was a big surge. Apparently, Trump said something. I'm not sure what he said. The crypto coffee coin. This is interesting. Brazilian coffee farmers are turning to cryptocurrency for their daily needs. Coffee farmers in Brazil's countryside could be soon using cryptocurrency for their day-to-day needs. A major Arabica bean cooperative, Minasul, is planning this month to launch a blockchain-based digital coin that will be backed by coffee supplies. Farmers will be able to use coffee coin to buy fertilizer, machinery, other non-farm products, including cars and food. Exchanging the coins for goods will take place in a digital marketplace backed by Minasul's store of crop nutrients, machinery, and other products. As much as 30% of the current harvest is eligible for exchange, 20% of the next crop, and 10% for the season after that. So that's an interesting development. I wonder if our coffee board is looking at that as well. But this is actually being done by the cooperative itself, not by the coffee authority in Brazil. Brazil is the world's biggest coffee grower and exporter. Now, I was telling you about Kenya's Eurobond being the best performing Eurobond in the emerging market sector, delivering you a 20% return in the first half, which is one heck of a return in the markets. And part of the reason is this. Germany just sold 10-year bunds. That's a 10-year German government bond with no coupon. Can you believe that? So you're getting no interest. Germany's basically borrowing money for free. And would you believe it? The yield was minus 0.26%. So people are getting tired of getting these negative returns. That's why they're looking for yield. That created the demand for the African sovereign bond index, about which we spoke earlier. Normally, when you buy a zero coupon bond, it's like buying a treasury bill. You buy it at a discount to 100, and when it matures, you get 100 back. And here you're paying 103 because it's actually being sold at a negative interest rate. This is the comparison. I wanted to show you this. This is the comparison between the US stock market, up 21.05% this year, or over the last period, about 21.05%. China down nearly 10%. And I think this is, I made this point about President Trump before. President Trump is highly tuned to the markets, and in fact something of a 21st century artiste. His positive trade war tweets are timed around the US market hours, designed to soothe, massage, finesse US asset prices, and he turns more negative in Chinese trading hours. And this is next level gaming, and there are few leaders that I can recall that have appreciated the purity of the market signal. Some of them ignore it entirely. President Erdogan is a very good example, and look what happens. But Trump actually, if I'm going to give him credit for anything, it's his ability to manage the stock market. That's why this market is up 21.05%, and that's why that one is down 9.5%. Of course, his friend Carl Icahn has stayed real close, but this is a tremendous success of Donald Trump, I must say, and I give him credit for that. According to S. Rabinovich, who was tweeting, said, I heard from Chinese financial journalists that they're under orders to avoid comparisons of America's and China's stock markets, and that's the reason why. And I can imagine that. So there is a serious increase in China's censorship of economic news at the moment, in particular because there are some real soft spots which they're not that keen on people talking about. That's Trump, of course, highly tuned to the markets, as you can see. And then turning now to Powell. Powell spoke yesterday. He was very dovish. He sort of indicated that the US was ready to make an insurance rate cut. And what happened is the dollar weakened, gold popped higher, and the probability of a rate cut in July is actually at 100%. And whenever you've seen the markets get to 100%, the Fed has not disappointed people. But my point is this: if they cut 25 basis points with an economy which is still at full steam, creating jobs, inflation today printed above 2%, the risk for the Americans is that next year they're going to have to put up interest rates double whatever they start cutting it here. And this is a point which I think they need to consider specifically, because Trump will be going for re-election, and you don't want to be going to re-election with interest rates going higher. So I think it's very finely balanced. I think Trump has been browbeating the central bank, but I do think a rate cut in July is more than likely to be a very, very big mistake. But essentially, a rate cut in July is now all but certain. And the markets will be expecting him to cut a quarter point. But as I said, he cuts a quarter point, he's going to be putting those rates up again next year. Now, let's turn to, this is the Taiwanese president who's visiting some Caribbean islands. She's stopping by in America on her trip for 4 days. Which will be the longest stopover by a Taiwanese president. She's warning of a threat from overseas forces, that's China. She left for the United States today. China claims that the self-ruled and democratic Taiwan is part of China, views it as a wayward renegade province, and has called on the United States not to allow Tsai to transit there on her overseas tour. Tsai's time in the United States will be unusually long, as normally she spends just a night at a time on transit stops. The US State Department has said there is no change in the US One China policy, under which Washington officially recognizes Beijing and not Taipei while assisting Taiwan. She said, "Our democracy has not come easily and is now facing threats and infiltration from overseas forces," she said, without naming any such force. She doesn't need to name any such force. We all know what she's talking about. Beijing has regularly sent military aircraft and ships to circle Taiwan on drills in the past few years. And of course, the United States sold Taiwan $2.2 billion of weapons a couple of days ago. So this is another flashpoint on the Chinese periphery, like Hong Kong, like Xinjiang, and we got to keep an eye on what's happening here. Of course, Taiwan has steadily seen its diplomatic partners be reduced. Africa was a big hunting ground where essentially the Chinese turned all the African countries. I don't think there's a single African country which recognizes Taiwan today, if I'm not mistaken. Reality bites, that's Mohammed bin Zayed, the Crown Prince of Abu Dhabi, as you can see in that photograph, and they have now withdrawn from the Yemen. Reality has bitten, they're real good. The Emirati drawdown should set alarm bells ringing in Riyadh. When your comrade in arms decides enough's enough, then it is time to start rethinking what exactly you're doing at the dance. There was a time, and to the Saudi Crown Prince and de facto ruler Mohammed bin Salman, it must now seem a long time ago, that a war against Yemen's Houthi rebels sounded like a very good idea. A quick win using Saudi Arabia's unchallenged air superiority in the north and their ally, the UAE's ground forces in the south, would burnish his reputation as a young warrior prince in the mold of his grandfather and founder of the modern kingdom of Saudi Arabia, Ibn Saud. This was the theory when the war was started. And I said at the beginning that this was an unwinnable war in the Yemen. You can't suppress people in their own country anymore unless you're Israel and the situation is Palestine. But essentially, this was a colonial style war over people who did not want it. And it looks as if it's now in big trouble. The question is, how is he going to extract himself from that? I think the UAE were threatened with a drone attack on Dubai. And frankly, if one drone hits Dubai's airport, that's game over for the Dubai economy. It's very asymmetric. It's one of those situations where I think you would jolt that economy completely. And I think that's part of the reason that the UAE withdrew. They saw the risks, and essentially they actually achieved what they wanted to achieve. They've got control over Socotra Island, which is this important island there, and they've achieved what they set out to do. Let's finish up with this. This is the British oil tanker, which today was impeded by 3 Iranian naval vessels. UK forces, of course, arrested an Iranian tanker in Gibraltar, suspected of carrying Iranian oil, and the Iranians tried to interdict this British tanker, oil tanker. The British Navy had to step in. The British Heritage passed through the Strait of Hormuz. You see that Strait of Hormuz is just there, very, very small little space. That's where the Iranians have been putting pressure on people. And essentially 3 Iranian naval vessels impeded it. Maersk has already put a war premium on oil tankers that are moving through there. And ultimately, they don't have to close it down, the Iranians. They just need to make it way too expensive for anybody to transit that particular area. And that's what they seem to be doing quite effectively for now. The oil price yesterday and today lifted nearly 5%, in part because of that news about that interdiction of the British oil tanker, and in part because there was a big reduction in oil inventories in the United States. So keep an eye on that. We tend to lag this oil price by about 6 to 8 weeks because of the nature of our buying. But essentially, oil has rebounded very, very strongly and is highly sensitive to whatever's happening in that very volatile part of the world. We will need to keep an eye on that. This is The Smart Investor. This is Metropole TV, the first 24-hour business news channel here in Kenya and in East Africa. My name is Ali Khan Sachi. We're looking forward to speaking to George Bodo in the second half about a bunch of issues, and we'll start off with the derivatives market. We'll look at the insurance sector. We'll look at the banking sector. Please join us after the break.